Today, we're talking about one of those steady, reliable businesses. Waste management, ticker symbol WM. Trash collection might not sound exciting, but waste management has built a reputation for being dependable, profitable, and quietly dominant. In this video, we'll cover what they actually do, how they make their money, their current financials, dividend outlook, and whether they might make sense in your portfolio right now. But before we get to that, if you're new here and you never seen my channel before, my name is Elliot and I upload videos about investing, the stock market, and I do updates on my own portfolio, which is on the Robinhood app. So if that's something you enjoy, please consider subscribing. I upload videos just like this every 2 weeks. So what does Waste Management actually do? They're the largest waste and recycling company in North America. Those green and yellow trucks you see around town, that's Waste Management. They serve over 20 million customers, ranging from everyday homes to big corporations and city governments. But they do a lot more than just picking up the trash. Waste Management owns hundreds of landfills and recycling centers. They even convert some of the waste they manage into electricity by capturing gas at landfill sites. Because Waste Management controls so much of the process, from pickup to final disposal, they're able to create a stable and reoccurring income across their operations. It's not easy for other companies to compete in this space, especially because of the cost and difficulty involved. Let's break down how they actually make money. 1. Collection services. This is the regular pickup of garbage and recycling from homes, businesses, and government contracts. It's their most visible service, but just one part of the picture. 2. Landfills. Waste Management owns the disposal site where the waste ends up. These are expensive to build and maintain, and getting approval for new ones is extremely difficult, so the ones they already own are valuable assets. 3. Recycling and resource recovery. Waste Management sorts and sells recyclables like paper, cardboard, and plastics. The price of these materials can go up and down, but because they handle so much volume, they're able to stay profitable. 4. Renewable energy from waste. At many of their landfill locations, they capture methane gas and turn it into electricity, which they can sell. It's a smart way to create additional revenue from what would otherwise be waste. Let's look at the numbers. In 2024, Waste Management reported a revenue of $22.06 billion, net income $2.75 billion, diluted EPS $6.81. These figures present solid, steady growth for the company. Waste Management is up 13% year to date. Looking at the 5-year chart, they are up over 130%. But where Waste Management really shines for long-term investors is the dividend. As of July 2025, the company pays $3.30 per share annually after a recent 10% increase in December 2024. That gives you a 1.44% dividend yield. The payout ratio is 43%, which means they're keeping plenty of their profits to reinvest and grow while still rewarding shareholders. On top of that, Waste Management consistently buys back shares, helping to boost earnings per share over time. So why has Waste Management been such a solid performer over time? First, this is a business that's tied to real-world demand. No matter what's going on in the economy, people and businesses still produce waste. Waste Management gets paid to collect it, sort it, and dispose of it. Second, the company keeps improving how it operates. They now have over 12,000 natural gas-powered trucks, reducing fuel cost and emission. They've also upgraded routing technology to optimize pickup schedules and reduce fuel use. These kind of practical upgrades help them save money and keep profit margins healthy. It's not a business that relies on trends or hype. It just quietly performs. Now, let's talk about the stock. As of early 2025, Waste Management trades at a price to earning or PE ratio of 31.77. That's definitely on the higher side, but high quality companies like this often trade at a premium. Analysts expect earnings to grow at a 7 to 10% annual rate, which aligns with how the company has performed historically. If you're looking for a fast growth or deep value, Waste Management might not be for you. But if you're after long-term consistency, a growing dividend, and a real business behind the numbers, it starts to look very attractive. No stock is without risk, and Waste Management has a few to be aware of. Regulation changes could make certain waste operations more difficult or expensive. Commodity price swings affect recycling profits. When prices for materials like cardboard or plastics fall, that side of the business can take a hit. And cost inflation, especially in labor or fuel, could eat into margins. That said, Waste Management has been through many cycles and have proven it can manage through challenges. So, should you buy Waste Management stock? Here's how I see it. If you're looking for a business that's steady, built on long-term demand, and pays a reliable dividend, Waste Management checks a lot of boxes. It's not the kind of stock that's going to double overnight, but it's one that you can hold, reinvest dividends, and sleep well at night. I personally own Waste Management and plan to keep it as part of my long-term dividend portfolio. That's it for today's video on Waste Management. If you found this video helpful, please make sure to give it a like, subscribe to the channel, and let me know in the comments below. Do you own Waste Management? And we'll see you next time.